Well, hello everybody. Welcome to P.B.M. Money. Today we're going to talk about a topic that is probably pretty boring and a topic that nobody really wants to talk about, but it's important if we want to preserve some cash next year. And that is getting ready for the tax season. Now, most of us are old enough that we've gone through this before. We know what we need to do. But I wanted today to go through and talk about some of the deductions, especially in real estate, that you might not be aware of because some of the stuff we haven't been through before. And then some other things that are tax deductible that you might not have thought about, or you might have thought are inconsequential. But if you prepare in advance and have your paperwork in advance and you give it to your tax preparation people, it can make a difference. As an example, if you bought any real estate this year, the closing costs, some of which are deductible. As an example, if you paid a point or two up front to get your interest rate down, that's deductible. Any cost that you had that was associated with the purchase, deductible. The property taxes that you were responsible for from closing date up until December 31st, or if you had it all year, property taxes for the whole year. And here's one that is a two-edged sword, and it's depreciation. There is accelerated and straight line. When I was young, I took all the accelerated depreciation I could, but it came back to bite me because nobody bothered to tell me that when you sell, you have to pay that back to a certain degree. And oh, buddy. Now, if you made any improvements in the property, and most of these are, most investors know this. I'll tell you what got me started on this list is my son bought his first piece of investment property, and I told him he was complaining because of the cost and the little bit of cash flow, and I said, yeah, but you're going to get a lot of tax benefits from it. And he said, yeah, I'm going to have to research that. And I was like, I've been telling you most of your life. So I decided we were going to go down and just make a list. So like if you replace carpet or paint or air conditioning or windows, any improvement to the property, not only are the cost of the materials deductible, but also the labor. Now, one of the tricks that I used way back in the day, and I'm not going to bother with it now because I don't care, but a lot of the operators back in the day would set up an LLC with them as a general contractor and contract themselves to fix a property. That way, the material was deductible and you could pay yourself, and that was deductible. If you had to evict anybody, and we had a record year this year for evictions in some states because of the COVID-19. So any attorney's costs involved with A, a closing, B, evictions, or C, to set up any type of corporate or protective protection for you and or your property, that is tax deductible. Now, I said in the beginning of this video that some of the costs we've never had before, and I want to bring those to your attention. Forbearance cost. we went through forbearance on a piece of our property for 13 months. And I was always told that it would be added on to the end of the loan. So to me, that meant that a 30-year loan that had 1 year paid on it would still be a 30-year loan with 1 year paid on it when we resume payments. That ain't how it works. All that interest from all that year gets added on, so that means that your cost basis increases. And in our example, I probably lost $6,000 or $7,000 in equity just on the forbearance cost because they had to redo the escrow amount and the interest on the loan, blah, blah, blah. So your cost basis, now that can be good when you go to sell because now you won't be paying taxes on that, but the bad news about that is now your payment goes up that amount, now your cash flow is diminished. Also, any costs that you had associated with the forbearance by an attorney. I don't know about your forbearance, but I had to keep an attorney on to find any loopholes that came through the system, and he did pay off, and he got my tenant out several months before the rest of the state was allowed to. So a good attorney is an investment, not a waste of money. And when it comes to real estate, the last thing I want to talk about is, of course, you have to pay income tax on the rents collected. However, what a lot of people conveniently forget about is if you send somebody to collections and you get the money, you got to pay taxes on the collections or any late fees through the year. Any income from the property has to be declared and you have to pay taxes on it. So when you get ready this time of the year, which is the ending of December, you should be getting all of your paperwork together. If you have multiple properties, keep them separated by property. And I would make summary notes, and I always do for my people that do my taxes. Like for each property, I would put address ABC, and then I would summarize attorney cost, income, and then I'd break my expenses down by, property tax, improvements, labor, blah, blah, blah. And I would just make that down, and then I would attach that to all the bills and receipts that I had. And if they have any questions, they can always call back. So, it takes a little bit of preparation up front, but if you start preparing now and just do a little bit each time, by the time it's time to get your taxes done, you can have a pretty complete picture of your real estate finances. Now, one of the biggest benefits, well, I don't know if I could say the biggest, but one of the good benefits of real estate income and expenses is this. Any money that you lose on your properties, you can apply that towards your regular income for the year. So and that includes the depreciation. So if you lose $10,000 on your properties, you can take that loss and offset it against $10,000 of income on your regular income or any other income that you have. That is regular income. So like if you had one property that lost $10,000 and you had a job where you owe $10,000 in taxes, you could offset those two and pay no taxes. That's one of the major benefits of owning rental income. Remember that. And that's why I always used to take accelerated depreciation. I won't be anymore. I'll be taking straight line. I'd rather pay a little bit now than have to worry about my cost basis being so low enough that I get killed when I go to sell, if I go to sell. Now, if I have no intention of selling and I know that I'm not going to sell, then accelerated depreciation is the way to go. Because you can get that You can depreciate that, I think, twice as fast. But I think right now most people are using straight line depreciation. Now, when you are getting prepared for your taxes, I break mine down into 3 separate categories. My regular income for my job, those are W-2s. Stock income, those are statements from the different, like a mutual fund and Webull and them online. You can get that information offline. From your banks, any investments that you make, they will send you receipts at the end of the year. Just put all that together, staple it together. But that way there's 3 separate incomes. Your W-2s, your 1099s, and your real estate income. Any other income you have, just write other on your cover sheet, and make sure you provide backup paper for all of it. None of your expenses will be deductible without receipts. The IRS will insist on receipts. I mean, I guess with the exception of mileage, but even then, you don't get to deduct mileage. And I learned this when I sold insurance. If you drive to your office, which is 5 miles, and then your first stop is 5 miles, you don't get to start deducting mileage till after you get to your first stop. So you've gone 10 miles before you get to deduct any mileage. But I would keep a mileage book, especially if you have multiple properties and multiple 1099s. I would keep track because that mileage does add up pretty quick. And I think the last time I heard it was 43 cents a mile. So that's a big tax write-off, especially if you're in sales. So the purpose of this video was just to remind you that tax season is coming up. We got about a week or so before we have to get serious about it. Most people will wait till the last minute to get their paperwork together. Figured if I gave you just a few helpful tips, a reminder that it's coming, and some different possible tax write-offs this year that are different from anything else we've seen in the past, it might help you out on your income taxes. So the few extra minutes you spent watching this video hopefully will save you some money on your taxes this year. Well, you guys have a great day, a great week, and happy investing and successful tax season.